Hello, everyone. How you all doing today? I hope everyone's day is going well. My name is Robert Nelson. I'm a financial education coach with Prosperity Connection. Just give a little bit of detail about Prosperity Connection and who we are, what we do. We are a nonprofit organization that offers free financial education to St. Louis and its surrounding regions. So we do this through one or two ways. We have group classes we teach. As such, now you all are seeing a virtual class where you get to come in and sit down, have your coffee, have your tea in the comfort of your own home, your office, wherever, and you get to see us teach. And with these classes, the class topics can range from home buying, auto buying, credit, budgeting, and we try to talk on various topics revolving around money, anything dealing with finances. So, the second way that we help people within the St. Louis area is through one on one financial coaching. With financial coaching, that's where we help individuals achieve their financial goals, no matter what they may be. So, just give you an example, someone comes to a class, let's say they come to a home buying class, and they say, well, I never really thought about home buying before now, but I'm kind of pumped up about the topic. I really want to learn more. I want to take on this challenge of purchasing a home, but I don't even know where I stand in this process, nor do I know how to go about purchasing my home. You can meet with a coach and we can help you achieve that goal of purchasing a home. So whether that's meeting with us once a week, once a month, however often you want to meet, we literally put the ball in your court. So one-on-one financial coaching, we help you achieve your financial goals. Our free classes, we teach those across the St. Louis area. We have four different Excel centers that we teach out of. First one is St. Charles Rock Road and 170. That is right off the highway. Second one is in the 24-1 community. That's on Page and Ferguson is the closest intersection. We're right across the street from the cinema, actually kind of cat a corner. And next is our Old North Excel Center, and that is in Old North St. Louis, and go figure. And it is about a block south of Crown Candy. So if you stand on that corner at Crown Candy and you walk south, you will run into our building. It's one of those storefronts. And our last location is South City, and this is on Gravois in Oregon, and this is right across the street from Quick Trip as well. I know we like Quick Trips. We just keep putting buildings next to them. So those are the four Excel centers we teach out of, and just to make sure I say this multiple times, that our classes are 100% free. Financial coaching is 100% free. Please take advantage of services like this. They help. We're here to help the community. So that's just a little bit about Prosperity Connection. So what I want to talk with you all about today, I wanted to talk to you all about the cost of being unbanked. So first thing I always is like, what's unbanked? What is unbanked? So we're going to kind of dig deep and talk about this thing, and we're going to talk about banks and financial institutions and credit unions, and just kind of really dive deep and get to the nitty gritty. So first things first, what I really think happens with financial institutions is I get a lot of mixed feelings from people. So they may say, well, I had a bad experience with a credit union, or this bank tried to take my money, and I really didn't like that. So I just don't trust banks. So they take people money. And I think what happened is there's a huge misconception about banks and credit unions. So we're going to talk about that here shortly. So first things first, what is being unbanked? So when someone is unbanked, they do not have access to a financial institution that offers their basic services, such as free check cashing or loans at reasonable interest rates. So these people typically fall victim to other things in the community that take advantage of a lot of people. And some of those things can be like check cashing centers. You go having to pay a fee to cash your check every time you get paid versus having a financial institution. And then you got some people that just say, well, I solely deal with cash. Well, the way our world is going, most things is electronic now. I remember my very first job, I got paid by checks. I would get paid with a check and I would go put it into my bank account. And This is when I was younger. So even before I had a bank account, I would go to the bank the check was drawn off of, and I would cash that check there. Now, most of everything is direct deposit. You hardly ever see any jobs that say they offer checks as an option for being paid. So, with everything being electronic, direct deposit, one of my initial questions was, well, if you don't have a bank or a credit union, how do you get paid? Typically, people who don't have a financial institution, they either get paid through having prepaid debit cards. So prepaid debit cards would be like, a Rush card, a NetSpend, or different cards that are cards that you can use to get your direct deposit on. And some employers even offer these prepaid debit cards. Now, the only issue with these prepaid cards is they act as a substitute for a bank account, but some of these cards come with a lot of fees. So some of them charge you a monthly fee. Then they'll charge you per transaction. I've seen some charge 50 cents per transaction, $1 per transaction, and then some charge you to view your balance, to make withdrawals from ATMs. So for people who have a prepaid card that has direct deposit, they're spending roughly $196.50 every year just for not having a bank account. Now, if we take that same person, but we take away their direct deposit, that number jumps to $497.33. And that number jumps because now they no longer have direct deposit, or this scenario, this person doesn't have direct deposit anymore. So they're no longer having their employer put the money on the card. They're having to physically cash their check and then put the money on the card. So the check cashing place is charging them a fee to cash the check. Then the prepaid card company is also charging them to put the money on their card. So now they're paying a higher amount in fees monthly. And then you have people that say, well, I'll just use cash. I'm going to solely use cash. I'm not going to worry about using a debit card. I'll use money orders and envelopes. And those people spend roughly $198.83 a year just for using cash. And that's from paying envelopes, paying for stamps, and mailing things off, and money orders. So, as we see, no matter which option you choose here, if you're not choosing banking, sometimes it can cost us a lot of money. So next thing is, why would someone be under unbanked? So if you're unbanked, someone who is unbanked may have distrust of financial institutions. That means, I've gotten burned from a bank or a credit union before. I feel like they did me wrong. They didn't do right by me. I just don't want to deal with them. Next could be lack of understanding. They just don't really understand how the accounts work. They don't understand the different components of the institution or the rules, so they just stray away from it altogether. Then you have social barriers. These are people who say, well, where I grew up, that's just not how we did it. Um, I wasn't raised like that. My mom didn't do it like that. My dad didn't do it like that. And next, you have financial institution barriers. So financial institution barriers are when people don't have access to a financial institution. So there are certain different communities across our nation, across our city, that we call financial institution deserts. These are places where the people who live in those communities don't have access to a financial institution. So if someone who lives around the neighborhood but doesn't have reliable transportation to drive to a bank or credit union, and they don't have a bank or credit union in their neighborhood, then they can't have a bank because they can't get to one. And that's a real issue in a lot of different communities across our country. Next is a lack of emergency funds. Some people feel like, well, I don't have money. I don't have a ton of money to put in an account, so I just don't have a bank account because I don't see the use for it. And then lastly is account errors or account abuse. So people who abuse their overdraft limits, who've drawn their account negative and never paid the money back. And I see these cases a lot. And to go back to what I was saying previously, a lot of people have a misconception about banks and credit unions. We hear the norm, and I'm not taking away from any of this. All of this is 100% true. People hear often that, oh, banks are there to help you. They're there to help you build wealth, be there for your children, be there for your community. And all of this is true. We cannot take this away from financial institutions. But I think through hearing all of that and knowing all the positives, we forget the main reason financial institutions exist. A financial institution is a business like any other business, and a business main goal is to make profit, make money, to continue to operate and be in service. So they have ways that they have to make money. In a lot of cases, those ways are through fees. And what happens is they tell us that they're going to charge us the fee. And I think what happened is we look to banks and credit unions and say, well, they'll be my buddy. They'll help hold me accountable and keep me true. When in all honesty, they told you in the beginning, I also need to make money as well. So if you know Netflix is coming out of your account, and let's say you may not even know Netflix is coming out. Let's say we know we have Netflix. So eventually something is going to come out of our account. And when we opened our account, they either told us verbally or they told us in writing that, hey, with this account, if I have to cover a transaction for you, no matter the amount, I charge you a $35 fee. And we know we only got $8 in our account and Netflix 12.99 is coming through. That means we're going to get charged a fee. So we can't say that the financial institution did wrong by us. We just didn't follow the rules they set in front of us. So, two things that can help you better follow these rules. Whenever you go to open an account, you want to ask for two documents. And these documents, the name may vary depending on where you go, but it'll be along the lines of this. The first one is called a fee schedule or a fee list. And this is a list of all the fees that institution can charge you and when they can charge you that fee. I call this the cheat code to your bank account. If you have a cheat code, you now know how to avoid every single fee on that list. It's just up to you to do it. Next, you also, now normally whenever you open an account, you should get this information anyway, but the next one should be your account agreement. So the account agreement would tell exactly what type of account you have and the details of your account so you can know the ins and outs of your account. And some things can hit you by surprise. Having those documents on hand will help you follow those rules with banking. And my hope today is that if you have some built up animosity against financial institutions or you feel like they've done you wrong in the past, that I hope this can lighten that burden a little bit and warm you up to using banks and credit unions a little more. Because although, like I said, they are there to make money, all the other stuff I said is also true. They want to help you build wealth. They want to be there for you, for your children, for your community. All of that is true. So you just got to make sure you use them. So a lot of people who have account errors and or they've abused their accounts previously, they feel like, well, I screwed up with ABC Bank or ABC Credit Union and now I can't get an account anywhere else because nobody else will open an account for me. So one thing you want to look at is called ChexSystems. So, ChexSystems is a report that banks and credit unions use to determine how eligible you are for an account. Your ChexSystems report has a lot of information, personal information about yourself. So, it goes over your social security information, it has your identifying information, so name and birthday, social, and it also tells how many accounts you've had, when those accounts opened, when they closed, why did they close, if you owed a balance when it closed, how much was owed. And it really just kind of tells your life story in banking. So this kind of gives someone a snapshot of what you've done in the past so they can try to determine what you're going to do in the future. The good thing about ChexSystems is you can pull your own report. Pulling your ChexSystems report gives you the knowledge of what you owe, what's out there that people are saying that you owe. So with your ChexSystems report, there's three ways you can pull it. You can either pull it over the phone, you can pull it over the internet, or you can pull it by mail. No matter how you pull the report, they're only going to send it to you one way, and that's in the mail. So if you pull over the internet, don't expect them to email you your check systems report. They're going to send it in the mail. So once you pull your check systems report, you can determine how much you owe to other financial institutions. This helps you because a lot of banks and credit unions offer what's called second chance accounts. A second chance account is an account that is made for someone who may have had errors in the past. This accounts for people that say, "Hey, man, I blew it before, but I learned my lesson. I want to try again." That's what these accounts were made for. Now, because these are accounts for people who may have had an error in the past, these accounts come with restrictions. What I always advise to people is make sure the restrictions still work with your lifestyle. Because if they don't, then there's no point in you having this account because this account is not going to meet your needs. The biggest thing about banking, period, is that making sure your account does meet your needs. So, always listen to the restrictions. Take your time. Make sure you understand it. If you don't understand it, ask the bank or credit union representative to go back, state it again, rephrase it, whatever it takes for you to understand it. You never want someone to talk over you because that puts you back in the same predicament. All right, so next is underbanked. So we've gotten past unbanked and we've talked about when someone does not have access to a financial institution. Underbanked is someone who has a bank account, but they do not use it to its full capabilities. They're not using this account um, to the best of their abilities. And what that looks like is someone who has an account with a bank or credit union, but they may catch a flat tire. They're like, oh my goodness, I need to get this tire fixed. I have to get back and forth to work. Well, I know my credit isn't good. It's not well. I can just go down. It's a payday loan place down the street. I'll go down there and I'll get a payday loan. And then we start ourselves in a payday loan cycle, which is not a good cycle to be in. A lot of cases, financial institutions, I'm not going to say all, but a lot of them have products for people who don't have exceptional credit. You just have to go in and ask. And typically, when people are underbanked, they use a lot of other predatory lending institutions, and those can range from like getting money orders from check cashing places, using non-bank remittances, payday loans. So, like I just said, with the payday loan situation, I see that often where people have a bank account, but instead of turning to their bank or financial institution, they go and get a payday loan. Title loans and rent to own services, pawn shop loans. So they go pawning things and things that could be family heirlooms or things of value to get money. Refund anticipation loans, and these are like loans that you'll find from tax prep places. So like um what's one? So I don't want to name any, but tax prep places that around St. Louis. You can go there and they'll give you a loan off of your taxes, and they take the money from your tax return. So a lot of people entertain all these different things instead of going to talk to their bank or credit union about what they got going on. And so I want to give you all a few examples that I've seen as someone who's underbanked. I worked in the banking industry first. When I first came into the banking world, I was a teller. And as a teller, you just perform everyday transactions for customers or members. And within doing that, I had a few different people who kind of had the same behavior. They would come in every few weeks and, well, every 2 weeks, I'm sorry. And they would say, hey, I got paid last night. I want to withdraw the entire amount of my paycheck. Then they'll do a withdrawal and they'll say, okay, well, I'll see you in a few weeks. And I wouldn't see them again for another 2 weeks. Now, if you're doing this every other week for X amount of years, I can assume that if you're getting paid on a consistent basis, you've been working, you're paying some sort of bill with this money, right? I mean, we can assume that they're paying at least one bill. I mean, I don't know everybody's life, so you might not have three or four bills, but we can assume that you're paying one bill. If you're withdrawing all of your money. That means you're paying your bill in some other way outside of your bank account when you can pay your bills through your bank account. You can use your debit card to pay your bills. You can use bill pay. So it's so many different options, and just something as simple as withdrawing all of your money tells me that you're not using that bank account like you could be. I've even seen people withdraw money from their financial institution, then walk across the street to Quick Trip and get a money order. Well, they may not have known that their bank or credit union offers money orders, in a lot of cases, a lot cheaper than Quick Trip. So, last example here, I wanted to tell you all about a personal experience of mine. Um, a few years ago, I was underbanked. So what that looked like, I got my first apartment, never lived on my own. I literally came from my grandma's basement to my own apartment. And once I got my own apartment, I didn't know how to pay bills. Like I knew I needed to pay bills and I definitely wanted to pay them on time. But I just didn't know how to go about doing it. So I paid my bills how I saw everybody else pay bills. I went to Schnucks. That's what the people around me did, so that's what I did. I got my first electric bill in the mail. I took it. It said $61. I went to my account and I withdrew $61 and walked up to Schnucks, and the lady at the desk, she said $62 and it was $62 and some change. And I'm like, I'm like, well, maybe I read the bill wrong. I'm like, I thought it was $61. And she's like, oh, well, we charge, I think it's like $1.15 or something to cash your check. So I instantly got mad. I'm like, well, wait a minute, I have to pay Schnooks to pay my bill? Like that doesn't make sense. So I instantly got mad at the lady and I'm telling her how this doesn't make sense, and Snooks is ripping people off and I'm giving her the whole spiel. And she's every bit of like 21, 22. She absolutely does not care about what I'm talking about. And she's like, okay, look here, you going are you gonna pay your bill or not? That's what the look she's giving me is saying. So I paid my bill. I didn't want to be late, so I ate the cost and I paid the $62. But I made sure she knew. I said I am not coming back here next month. Next month roll around, I'm reading my Ameren bill and I see that Ameren has a number you can call to pay your bill. I said, oh, perfect. I can pay directly to Ameren. I call the number, and to pay with your debit card over the phone, Lord behold, it's a fee. And the fee is higher than Schnucks. So, like a dog with my tail between my legs, I walked up back to Snooks because Snooks was cheaper than Ameren, and I was paying my bills at Snooks. And now I've been doing this about 7 months, and I'm a little upset about it. I'm one of those people where I can squeeze a penny out a dollar. So I've already determined how much money I was wasting in a year by paying my bills at Snooks, and I knew it just had to be a better way. And I'm complaining about it to one of my coworkers, and she goes, why don't you just use bill pay? And me not understanding what bill pay was, I'm like, whoa, wait, I don't have enough. I don't have enough bills for bill pay. I don't need a system to manage my bills. I just want to pay my gas bill and my electric bill. I had no idea what bill pay was. So with bill pay, you can set up your bills as a payee on your account. So this means a payee is someone that you want to pay. So you'll take your Ameren bill and you'll put Ameren's information onto your online banking. There should be a tab somewhere on online banking that says bill pay. And when you enter in Ameren's information and enter in your account number with Ameren, Ameren is added to your account. And you can go in, you can either make it an automatic withdrawal or you can do it manually every month, where you can go in and set up for Ameren to be paid every month. So with my financial institution, as long as I do it before 10 a.m. the day of I wanted to come out, that money comes out the same day. So it's not like one of those situations where like I thought it came out, it didn't come out, then I got charged a fee. Like you don't have any of that runaround. It comes out literally the same day. And then what I like the most about this system, with bill pay, your financial institution tells you what day Ameren will receive the money. So now you can never be late on your bill. Like if I know my bill is due on the 15th, I can play around with the dates on the system to see what day do I have to send it for Ameren to get it by the 15th. and it's perfect. So I once I started doing this, and one thing I learned quickly is that this is 100% free to you as a member or customer of that bank or credit union. And this saved me a lot of money because I didn't have to pay Spire and Amarin and Schnooks anymore. And then at the more I used it, I got a little advanced with it, and I learned you don't only have the ability to pay companies or um, your bills, you can pay people through bill pay as well, including yourself. One thing I do to help myself save, I have different bank accounts that I don't have any other access to other than to physically drive to that bank or credit union and withdraw money. I do that so it helps me save. I'm one of the people I will spend money if I see it, so I got to make it so I don't see the money and I can't touch the money. So what I was doing every pay period, I would drive around to these financial institutions, dropping money off because that was the only way I can put money in those accounts. So my paydays were like little mini field trips, just driving here, driving there. And now with bill pay, I was able to set up all those bank accounts under my bill pay. So when I pay my bills, I pay Amarin, Laclede, and all my savings accounts all in one day. And I do it from the comfort of my couch in 10 minutes. It saved me a ton of money and it saved me a lot of time. I was underbanked. Me not knowing this small aspect about my account made it very difficult for me to operate in banking. Once I learned this changed how I did everything completely. So, one way to help yourself if you feel like you're underbanked, um, and well, to keep yourself from being underbanked as well, whenever you run into an issue, no matter how minute you think it is, bring it to your financial institution. See how they can help you if they can. Worst case scenario, they say no, and you end up in the same situation you was already in. But at least you know what they can and can't do. So no matter the situation, you feel like, man, I just need $300 to get me to the next pay period. Go talk to your financial institution. Let them know. Be open and be honest. Say, hey, look, my credit's not where it should be, but I still need this $300. Do you all have anything that can help me? And you'll be able to figure out. So, couple reasons people will be underbanked. They feel like their account does not meet their needs. So, one big thing about your bank account, it should meet your needs. That is the whole point of having a bank account. And the way I look at it is when you put your money in a financial institution, they're using your money to meet their needs. They're investing your money, they're doing things to make them more money. So if you're not using them, it's a one sided deal. So you got to make sure this account is meeting your needs. And it's funny because I think as people, we allow comfortability to keep us in a situation that we don't like. I work with a lot of different bank partners, and so a lot of people ask me, "Oh, who all do you work with?" And I'll say, "Oh, I work with ABC Bank." And they're like, "Oh, I hate that bank. Oh man, they do this and they do that, and they taking money from people, and they charge me a fee every time they get a chance, and they feel so strongly about it." And I'm like, "Oh man, I'm so sorry to hear that. Well, who do you bank with?" ABC Bank. And it's like, oh my goodness, if you feel that way about them, why do you bank with them? Well, my direct deposit go to that account, all my bills come out of there. And basically, what that person is saying is, I'm comfortable. I have everything set up how I want it. So I'll deal with the situation that I'm not happy in because the simple fact that I'm comfortable. Good will always be the enemy of great. As long as we feel like, oh, I'm good, I'm in a good, I'm good. We will never care about being great. One example I always give to that is if you have a friend or somebody that has their own business or they're kind of just doing their own thing, you may come up with $1 million idea for their business. In a lot of cases, some people who are already successful, no matter how well of an idea you come with, their response is always, "Oh man, I'm good. Oh, thanks for that, but I'm good. I'm good." So good will always be the enemy of great. Don't allow yourself to get comfortable and not move or shift because of comfortability. If this account is not meeting your needs, go find another one. There are tons of banks and credit unions within our region, and I'm sure one of them will serve you. Next is a lack of understanding. Once again, they just don't know what all their accounts do. Just like in my example for myself, I had no idea my account had bill pay. So because I didn't know that, it caused me to be underbanked. Next, they don't have direct deposit. So a lot of people, because they feel like, well, I don't have direct deposit, they never really put money in the account. They just use the account to cash checks so that they can get free check cashing. And next is limited knowledge of account components. They just had no idea what their account could do, and some people don't even know what type of account they have to even know what the account does. So I encourage you to learn everything you can about your account, and that will also tell you if that account meets your needs. All right. So just want to do a little math thing here with you. So if you cash your check at a check cashing place, let's say the price is like $2 to $5 or 1 to 10% of the value of the check. A lot of cases, um, people don't know this, but when you go to check cashing places, you spend 25% of your check at the check cashing place. Now, when I saw these numbers, I'm like, wait a minute, $2 to $5 a check, 1 to 10% of the check. Where does the rest of that come from? Well, if you think about a lot of check cashing places, most check cashing places aren't just check cashing places. So when you go to those check cashing places and you're cashing your checks there, a lot of them have groceries. They got milk, bread. A lot of them offer money orders. They got scratch offs. They got cigarettes. They got things that people look for. So if I'm cashing my check here, oh yeah, well, let me get a money order as well to pay my bill. Okay, yeah, and I'm gonna go ahead and get a gallon of milk over here, and they get all these different things, and it's just racking up their bill. One good example of this is one major corporation that was watching little check cashing places and little corner stores that do this, and they stole this idea and kind of adapted it to where it can fit them. Is Walmart. Walmart only been cashing checks by the past 10, 15 years maybe, if even that. And Walmart did it because they were studying and watching check cashing places. And they said, well, I can do what they do, and I can probably do it a lot better than they do because I offer way more stuff. And that was the whole purpose of Walmart cashing checks. Because they know if you cash your check here in Walmart, you're going right to the back to buy toilet tissue. And, toilet tissue, no matter what Walmart you're at, is always in the very back of the store in the corner right next to the milk. That is set up by design so that you spend money. So this goes to show the importance of having a bank account. When you have direct deposit, I'm not cashing my check anywhere. So that alleviates the temptation of wanting to spend money there or getting things that I otherwise would have not gotten if I wasn't there. All right, so lastly is banked. We love banked. We desire for everybody to be banked. When you're banked, it comes with a lot of benefits. It comes with safety. You don't have to worry about nobody knocking you upside your head, walking down the street, taking money out your pocket. Now, I mean, I guess you may still have to worry about that, but at least if they take your wallet, you can turn your debit cards off and your money is safe. Next, it comes with security. You don't have to worry about anybody breaking in your house, busting up your floorboards, cutting up your mattress, looking for money. Next, it comes with access. Right now, it actually comes with a lot of access. So banks and credit unions partner with other banks and credit unions to offer a network of access to their institutions for their customers or members. So credit unions have what's called shared branch network. And what this means is if you are in the shared branch network, you can use this credit union at a different credit union. So let's say if I'm with ABC Credit Union and I want to use DEF Credit Union, as long as both of them are in the same network, then I can do my transaction for ABC at DEF for free. And that is nationwide. So to give you an example, when I was in Vegas, I have a credit union account that I use, and I didn't have any cash with me. And Vegas is a really big cash place. They use a lot of places only accept cash. So I couldn't find a credit union on the strip. But with the share branch network, it's a lot of credit unions that are in the network, and also 7-Eleven. So although I couldn't find a credit union on the strip, one thing I did find was 7-Elevens. Let me tell you, Vegas got 7-Elevens. Like St. Louis got Walgreens. Like it's like one on every block. So I never paid a check cash. I'm sorry, not check cashing. I never paid a fee to do an ATM withdrawal because I always did it from a 7-Eleven. So bank accounts come with a lot of access, and some banks partner with each other to do that as well nationwide to give their customers more access as well. Next, having a bank account comes with a paper trail. When you have a paper trail, that's one of the biggest things right now where we're at in life. Because with the housing market and things that's happened in the past years, banks and credit unions are really timid about who they slap their money on. And they're not just going to give a loan to anybody. They want to see a paper trail. They want to see where every dollar is coming from, where every dollar is going, which account was it from, whose name was on the account. They want to know everything. And it's so sad to see someone meet all the qualifications of purchasing a home except them not having a well enough paper trail. So that sets them back 12 months, 18 months to develop that paper trail that the bank or credit union is looking for. So when you're banked and you're using that account to its full capabilities, you have that paper trail. Banks and credit unions give what's called a monthly statement. And this statement shows all of your transactions from the previous month. So you can use that as proof saying, hey, here's my paper trail. This is where the money is coming from. You can see the direct deposit from my employer. You can see the bill paid to my bills. Like it shows everything. Next, when you have a bank account, it builds relationships. Now, I would be lying if I said a lot of things or everything was based off of relationships you build. But a relationship is one of those things you want on your side when you need it. So after being a teller in the banking industry, I was a member service rep or loan officer, personal banker. The term varies depending on where you go for what that title is. But basically, I opened accounts and did loan applications. So I would send the applications to underwriters, and the underwriters will make the decision on the loan, then send it back to me, and I contact the member or customer and give them the decision. So within doing that, when I left, when I came to the education side, I got a lot of emails of people saying congratulations, and one of the underwriters told me, she was like, "Oh, we're gonna miss you. You always had the best stories." And I'm like, "Stories, huh?" I thought she was saying I was lying. I was like, "I don't tell stories. What are you talking about?" And when she said story, she said, well, think about it. She said, you're the one who has a person sitting in front of you. All I see is a computer with numbers and credit scores. I don't know who the person is. And she said, and you always did a good job of explaining to us who that person was. Now, I didn't do this because I really felt like this person deserved the loan or I really was rooting for them to get the loan that day. It was just, I just happened to know the people that were coming in. You can't go somewhere every day or every week for a year and not get to know anybody there. Because eventually going to happen is, hey, Mr. Jones, how you doing? It's going to turn into, hey, what's going on, man? How are your kids? That's good, man. I'm glad they're doing good. Well, how about your mom? I remember you said your mom was sick. Well, I'm glad she's doing better. We've been praying for her. All right, well, yeah, I'll see you next week. You have a nice one. And you just kind of get to learn who people are. So when that happens, when Mr. Jones comes in and he needs a loan and he's down on his luck, who's going to be an advocate for him? I can because I know Mr. Jones. So when I'm doing his loan application, I see his credit score got late payments and I see he's been having a rough time. I can explain the situation. I can say, well, hey, Mr. Jones had to take off working because his mom had cancer. He had to take her to chemo and take care of her and nurse her back to health. Within doing this, he within doing this, he had to take off work. So when he took off work, it caused him to fall behind on his bills. Now he has late payments on his credit report as a result of that. His mom is well. He is now back working. He has check stubs to prove it. It's just now he needs money to catch up on his bills. he can afford a monthly payment of X amount of dollars a month. And I can tell Mr. Jones' entire story to an underwriter because I know him. He comes in there every week. If you don't have a bank account, you don't build relationships like that. So you want to have a good relationship with someone in that type of position. And lastly, it builds wealth. Now, right now, in the way the market is going and the world we live in, you're not building a whole ton of wealth, But the way I like to look at it is, if you have $1,000 and you put it under your mattress, and you come back 6 months later, you have $1,000, and that's if nobody went and took it or you didn't go pinching off of it. Whereas if you put money into your bank account, you like I said, you may not have a whole ton of money after 6 months. You may have like $1,000 and some change, $1,001, $1,002, but you have more money than what you started with, and that's just with a regular savings account. Like they banks and credit unions have so many other savings instruments that you can use that render higher interest rates. So, like I said, it builds wealth. So that's banked. Lastly, I wanted to leave you all with the difference between banks and credit unions. I hear so often I get questions of which one is better. Is banks better or credit unions better? I think credit unions better because credit unions help you build your credit. Side note, uh, because credit is in the name does not mean having an account with a credit union helps build your credit. Simply having an account with them does not. Now, they have a lot of products and services that can help you build credit, as too does banks. But just because credit is in the name does not mean they help you build credit. I hear that a lot. Um, but we're gonna talk about the differences. So, banks and credit unions, both of them are federally insured, both up to $250,000. Banks use the FDIC and credit unions use NCUA. Think of the FDIC and NCUA like huge insurance companies for banks and credit unions. And basically, what this means is if anything happens to that bank or credit union, if that credit union is under the FDIC, I'm sorry, if that credit union is under NCUA or that bank is under FDIC, your money is federally insured. So if that bank tanks, go down, files bankruptcy, your money is federally insured up to $250,000 per account. If you got more than $250,000, get more than one account. Or come see Robert because apparently you got way too much money and you need to give some to me. So banks have customers, credit unions have members. And we'll kind of talk about the differences here shortly. So with banks, so like I said, the banks their insurance company is the FDIC. The FDIC was created in 1933, and it's just used, like I said, to help people stay afloat even with their bank account. So no matter what happens to that bank, they are still secure. They are still okay. Before the FDIC, a lot of people were afraid of banks. If a bank got robbed, and you just got robbed. So they had to come up with something different to help people within banking. So one big thing about banks is that they retain a lot of their money. And that is because banks are for-profit entities. So their money isn't filtered. It kind of stays with the bank. And we'll talk about the differences here about what I mean by that. So because of that, banks can do large projects. They can do large things that take a lot of money. Whereas some credit unions may not be able to do that. So credit unions, so like I said, credit unions have the NCUA. Credit unions were established by Congress in 1970, and basically what happened was it was a group of small town farmers, lawyers, doctors, people who would rely on banks and loan sharks, and they said, you know what, I am sick of loan sharks and banks being the only people that can loan money. Let's put all of our money together and we will loan money to each other. Out of that money, pay it back with interest so that money grows, and we will use that money to only support each other. And that concept grew to what credit unions are today. So, like with credit unions now, it's a group of people who support only that group of people, and you have to qualify with that group in order to get into a credit union. So, for instance, Anheuser-Busch Credit Union, they recently actually just changed their name to Together Credit Union. But when they were Anheuser-Busch Credit Union, you couldn't get in that credit union unless you were an employee of Anheuser-Busch. And I believe if someone in your family was employed at Anheuser-Busch, that was the only way you can get into the credit union. St. Louis Community Credit Union used to be called St. Louis Teachers Credit Union. And in that credit union, you couldn't get in unless you were a teacher or you were related to a teacher. So, a group of people that decide that they're only going to help that group of people. So, you have to qualify to get into a credit union. Now, think of credit unions more like democracies, by the people, for the people. So credit unions are usually not for profit, and because of that, a lot of their money is filtered back into their member base. Speaking of member base, that's why they call the people that have accounts there members, because you're not a customer, you're a part of this. So a lot of people say, well, if I own part of the credit union, if I'm a member, how come I can't make the rules? You can. The member base is their opinion is used or voiced to the credit union through the board of directors. The board of directors isn't paid staff. It's not people who are hired. These are members who are voted in to be the board every year, and the board speaks the voice of all the members to the credit union. So if you have an issue, take it up with your credit union's board, and they can help distribute that issue for you. So, like I said before, credit unions democracies by the people for the people. So a lot of credit unions' money is filtered back into their member base. And they do that by having cheaper fees. A lot of credit unions have a lot cheaper fees than banks. Um, they also do that through having lower interest rates for people with low credit scores. Typically, the lower your credit score, the higher your interest rates. I've seen that a lot of credit unions have lower interest rates for people with higher credit score. I'm sorry, lower interest rates for people with lower credit scores than normal. And so their money is filtered back into their member base. Now, because they do that, credit unions don't retain a lot of their money, which means it may be a cap on how far they can help you. So, to give you an example, I work with two different institutions, a bank and a credit union, and basically, the credit union, they have unsecured loans that they have auto loans, and let's say their highest unsecured loan, we'll say $15,000, and maybe under some circumstances, maybe even 50,000. Um, One of my bank partners, I work with their business department, so their small business department. Once we first established this relationship, I wanted to learn everything about their products. So I said, "Oh, I was talking to one of the business specialists, and I said, "Oh, I see that you have small business loans on like those like 30,000, 20,000." He said, "Oh, our small business loans go from 50,000 to 2 million." So that told me that they were willing to put at maximum $2 million on someone's idea. I mean, if you're someone, depending on like if your small business is already up and running, or if you're trying to get going and you got a business plan is a really thought out idea. So they're saying that they're willing to put $2 million on your idea and not even bat an eye about it. Most credit unions' net worth is only in the millions. They can't give out that much money at one time. Some maybe if they have enough, but a lot of credit unions, if they gave out $2 million, they be biting their nails and praying that they got that money back, because that's a lot of their money going to one place. So what I've learned is, if you're new to banking, you don't quite know how this thing works, you're just trying to get your feet wet, I'd always advise to start with a credit union. Fees are lower, repercussions are lower if you mess up. It's better to mess up low than mess up high. because the thing about banks, although they have more money, they can afford bigger projects, they may render more money in interest on investment accounts, but banks can sometimes be uh, a little harsh with their fees. But my personal belief is that is like that because by the time you get to a bank, you should understand how banking works. And I think that's kind of the path that they're rolling with as far as their beliefs is that by the time you get here, you should already know, you should understand. So if you just starting out with this thing, start with a credit union. Use it to get your feet wet, learn banking a little bit, and get proficient at this. But once you kind of get to the point where you're like, man, I'm looking for more. I think I want to start a business, or I want to do some real estate investing, or I want to invest a little bit more money in other places. Well, now it may be time to go holler at a bank. They got more money. They can probably help you a little bit more on the back end. So just knowing those differences and just like I said, neither one is better. They're both awesome. I love banks and credit unions. It's just it depends on where you are in your life to determine which one is going to serve you the most. And what I always encourage people to do is, create a list of everything you're looking for out of your bank account. Use that when you go vet bank accounts and vet financial institutions. So I always tell people look for a financial institution as if you would look for a partner. You don't just find some random person and say, "Hey, you, yep, you look good, you good enough, let's get married." No, you got to court them first. You got to figure out what do you like? What is your family like? What are your background? Where you come from? Because that plays a role. It's also the same thing with banks and credit unions. A lot of people choose their bank or credit union based off, well, my grandma banked there and she been banking there for a while and they treat her good. So I'm gonna go and walk on down there. I'm opening an account there because my granny said they good. Well, just because that account works for grandma don't mean it's gonna work for you. You got to go and make sure that this account meets your needs. So always create a list of what you're looking for out of this account and you use that list to determine what's going to meet your needs. All right. Lastly, no, that's it. That's cost of being unbanked. Thank you all for tuning in, for staying with me for this time. I know it's been roughly an hour, and I know I've been chatting a lot, but I hope you all enjoyed. Please stay tuned. Check out our social media for other classes. We have a lot of live video content. We have a lot of recorded content that you can also view. I always say, please stay connected with us. Make sure you check out our social media. I have our Facebook and our Twitter and website below. Please keep up with us. You see all the different things we got going on, things we're doing in the community, and the differences we're making. All right. Thank you. You all have a wonderful day.